Hey there, and welcome back to Retire Your Way with ILG Financial. My name is Chase Lopez. This is Dave Lopez, and we're both registered investment advisors for ILG Financial.
Yeah, I'm glad to have you back. Today, we're going to talk about a question we get quite a bit, actually, which is, can I contribute to my IRA and can I contribute to a Roth IRA? I'd like to contribute to them, but I participate in an employer plan, whether it's a 401k or you name it, a 403b. So can I contribute to both an employer plan and an IRA? And the answer is quite simple, maybe. Right? So let's jump right into it. Here's how it works. If you're have participated, when I say participate, that means you or your spouse.
Yes.
If either of you are participating in an employer plan, we'll talk more about what that means later, you can still contribute to your IRA or your Roth IRA as long as you don't make too much money. So what are the limits, Chase?
Yeah, so for a married couple filing jointly, it starts at $116,000 for income, and then it slowly gets phased out. And what I mean by phased out is you get to deduct less and less, or contribute less and less, excuse me.
Yeah, your contribution limit for an IRA is $6,500. Exactly. An extra $1,000 if you're 50 or older, so $7,500. So what Chase is saying is, if you're once your adjusted gross income hits $116,000 for a married couple, then they start to say, well, you can't do the whole $7,500. And it starts. It quickly goes away between 116 and what 136. 136 for a married couple. Within $20,000, you can't do it at all.
Right. So if you make more than $136,000
as a couple,
yes, as a couple, you have an employer plan, right? A 401k as an example. You cannot contribute to. You can contribute to an IRA.
Yeah, we'll talk about that.
We'll talk about that. It's just not deductible against your taxes. For a single person, those numbers are. It starts at $73,000 and it phases out at $83,000.
Again, very quickly.
Yeah,
$10,000. So that's the IRA. We also say, well, what about can I do my Roth? Well, remember, this is tricky. A Roth has its own phase-out limits to contributing to a Roth, even if you don't have a plan.
Exactly.
So whether you have an employer plan or not, you can only contribute to a Roth if you're married, if you're under a certain income level. Do you know what are those numbers?
Yeah, so if you're married, it's $218,000, and then it phases out by $228,000. So again, it phases out pretty quickly there. So if you make more than $228,000 as a married couple, you cannot contribute to a Roth IRA, regardless of if you have an employer plan or if you don't have an employer plan.
Yeah. Now, if you're under those numbers and you can contribute to a Roth IRA, then everything we said earlier applies. Contributing to a Roth, if you have an employer plan, again, you would have to be under $116,000 adjusted gross income as a married couple, and then that would qualify you to contribute to a Roth or a traditional IRA.
Yep.
Right? So that's the first thing. So that's who can contribute and who can't.
Yep.
Right? The next question would be, is when we say I participate in an employer plan, what in the world does that mean? Because of course you're thinking, well, I'm not, some folks would say, well, I'm not participating, I'm not contributing to my 401k, so can I still do my IRA? And the answer again is maybe. So tell us about that.
Yeah, so a lot of people, to your point, Dave, think just 401k, right? If you work for the government, maybe 403b or TSP is popular with federal government employees, but it also applies to pensions. So if you're profit sharing, exactly. So if you aren't contributing to retirement accounts at work, but they are building a pension for you, well, the IRS says you actually are participating in an employer plan.
Yeah, that's sneaky. That's happened to one of our clients before, where they were specifically not contributing to their 401k plan because they didn't get any matching and they just wanted to build their IRA up.
Right.
And then they came to find out later that their employer was just putting the smallest amount towards a very small pension. But even $1 towards the pension disqualified them for making a deductible contribution to their IRA. So you need to be very careful. Get with your tax professional, your financial advisor. Let them know, what's available with your company, and they will quickly be able to tell you if you qualify or not.
Exactly. And there's one more little caveat in that a lot of people think, well, all of these limits, can I still contribute to an IRA regardless, right? And the answer is yes. So even if you're disqualified from some of the limits that we talked about here today, you can actually still put money into an IRA, traditional IRA that is, right? The only issue there is you just don't get the tax deduction up front. So the money grows inside of the account and you'd pay taxes on the gains inside of the account.
Yeah, and that's a tricky one. So a lot of folks would say, well, why would I even do that, right? If I can't deduct it. Well, you can't deduct it, but it can still grow tax deferred, right? So if you put $10,000 in, over the next 30 years, that $10,000 grows to $50,000. When you pull the money out, you don't pay tax on the 10, but you do pay tax on
the 40.
The 40. Now, if you had deducted the money, you would have still paid tax on the 40, right? But just the 10 also because you got the deduction. So it's not that bad of a deal. You're still growing the money tax deferred. You can also use a strategy that some of you may have heard of called Roth conversions to put the money in, and since it's not deductible anyway, there's techniques to where you can then immediately roll it to a Roth and have it come out, all of it tax-free down the road.
And it grows that whole time tax-free, right?
And
it goes in, you just pay the taxes, it goes into this Roth account, and then it grows tax-free for the rest of your life, right?
Now there's some tricks there,
right?
Yeah, it's never as easy as it sounds on our video. So get with your tax professional or your financial advisor if you want to know more about a Roth conversion or whether you qualify for any of these extra IRA contributions. If you don't have one, please feel free to reach out. We're glad to help. We'll help any way we can.
Yeah, so go ahead and hit the like button down there, the subscribe button as well. And if you just click on that bell down there at the bottom, you'll be alerted for any future videos that we put together.
See you next time.